Most investors walk away from deals the moment a seller won't budge on price, but what if that gap was actually the opportunity? In this office hours session, we brought in Nikhil Sharma, a real estate broker and wholesaler who has completed over 1,000 transactions in the last 24 months, 63% of which were novations, to break down the exact sales process and negotiation tactics that turn price gaps into profits. Let's get into it. Everyone wanted to learn the way that he does novations and how he runs his operations with, multiple people, like people doing the work for wholesalers that can't move a novation deal or they can't move a deal at all. And he showed you guys how he was able to systemize that so that he can actually do it for others too as a done-for-you product. But today I want to do a masterclass on the novations and dispo, specifically novations, the way that Nico does it. What's up, brother?
What's up? What's up? If you noticed too from our last call, I am no longer gas station owner. We got a nice little haircut and beard trim on here, so yeah, happy to be on here and deep diving the master class of just novations, the sales process behind them too, so you guys can still get cash deals at the right prices. And then if for whatever reason the seller is not okay with your, that number, it can't be bridged, then you're able to segue into, the novation pitch, getting expectations, having that buy-in. So happy to be here, brother. Happy to be talking to the community.
I'm gonna pin you here, brother. For anyone that wasn't here, let's do a quick intro of yourself and how you're gonna make this masterclass super valuable for everyone. Just for you guys, everyone to know, he literally shared I think it was a sales process that he follows in order to get deals consistently with a consistent way, right? And last time he shared that was like 2 weeks ago. I'll be able to drop that here later, but I want you to get started, brother, and share away.
Absolutely, yeah. So what we'll do, we'll start here. I'm going to share my screen. We'll start on that same document that you guys will all get a copy of after this call, if you don't already have it, right? So just starting here. So just to give some background for everybody who wasn't on the call last week. So I'm Nikhil Sharma. I own Top Brokerage and Top Buyers. Our brokerage is in 8 states, and between the investment firm and the brokerage, we've done over 1,000 transactions in the last 24 months. 63% of those were novations, and between my own deals and the solopreneurs that I've worked with doing 100, 150K a month to the big businesses spending 6 figures a month on marketing, doing $1 million months, right? Have been able to really see people's sales process, the novation process across multiple businesses, in addition to my own testing this out to get to this point in perspective with this being the best sales process for you guys that are doing novations, right? To be able to still do cash deals, right? If you have the resources to get it at a quick close cash price, make 100K off of a flip or make 100K off of a, off market assignment, you don't want to eliminate yourself from that possibility. And it also allows you to get novations at prices that sell, right? So one of the things that I've heard from people is, hey, I got these deals, they're just sitting on the market. Well, the reality is if I have a Lamborghini outside and I'm selling it for $5,000, I'm going to get flooded with buyers. Why? Because there's an intrinsic value associated with this property that is way higher than $5,000. With properties, it's the same thing, right? But you just have to have the right sales process. And then, like Esteban said, we give you the done-for-you dispo and TC to put you in front of the buyers, still have you as the decision maker, but just be that fulfillment arm so you can't hyper-focus on putting more in your pipeline. But let's start with just the script itself, right? So in regards to the script, in regards to just the sales process, so I'm gonna let this.
Did we lose him? Maybe we did. Or was it me? You guys hear him? Or not? He's gone?
No, we don't hear him.
We can hear you, yeah.
Oh, okay. Okay.
He's back, maybe.
Google did it to me last week, so I don't know why it's just decided to kick me off. It's the same shit that happened last week, Esteban. But
Damn. All right, let's try again.
all right. Round two.
You might have
So,
two things open, but yeah, go for it.
all right, let's share those. All right. We'll just go entire screen. All right. You guys see my screen? Hello, hello.
No, you gotta share away.
Let's see.
We got already 22 people here, but
Perfect.
no pressure.
So can you guys see my screen now?
Yeah.
Okay, perfect. So we're gonna start with the script, right? So if we come over here to script itself. All right, within here, guys, one thing that's very important for these calls, and I got this from even just reading The Wolf of The Way of the Wolf, the Jordan Belfort book. Strong introductions are very, very important, right? And so mixing going negative with a strong introduction. Hey, this is Nico, just calling in regards to, and if it's a cold call lead or inbound lead, right? Calling in regards to the inquiry that we got, did I catch you at a bad time, right? One of the things that I'm always doing is I'm giving a little bit of like, hey, we buy houses, we're, giving them a little background on who I am myself, framing myself as an expert in what I do. I always say something along the lines of, I'm a real estate broker and investor, buying houses across the Southeast. But more than anything on my end, right? This call is about you, what's going on with you. Got to understand your situation first to see if we're even a good fit for each other, right? And that strong intro, and I have some verbiage in here, but you guys, the overarching theme from a frame standpoint is just high energy, being able to have that prospect understand you do buy houses, that's what you're calling about, but then immediately pivoting back to the focus being on them, right? From that focus being on them, you're then going to want to take them through your fact find phase, right? So this part of your script for everybody is going to just, and I'm going to just give you guys visuals and just show you guys using my hands right now for a second. But this part of the script, the fact find, is when you're getting the ammo, right? You're getting the ammo. What's your dream outcome? What do you want to have happen? What's the situation? Tell me what's going on just in general with the property. Now, if you guys have sellers that are red sellers, right? Meaning sellers that are like shutting that down. Oh, you don't need to know, yada, yada, yada. You can bounce the condition. If you guys are doing land, you can ask about the soil, the perk test, the surveys, right? If you're doing houses, you can start to go into condition, but then hop back to situation stuff, right? Because that's going to be very, very important as you guys go through these conversations to have that ammo for the later half of the call. Understanding what they not just want, but need, right, in the fact find phase is going to be one of the things you're going to want to check off from a process standpoint. All right, so when you're going, did somebody say something?
Nope.
Oh, cool. When you're going through that fact find phase, understanding just the ins and outs of their situation on top of what their dream outcome is, one of what they want, but two, what they actually need. All right. So what that looks like is seller might want 150K, but their dream outcome is they use the funds from this house to buy another house and are able to help them get, relocated and put a down payment down. Well, the reality is if you do enough fact finding and understanding their situation, what's going on with the property, the finances, right? They might think they need 150K, but if they were to put down 20% down, mix with 10K of moving costs or 20K of moving costs, they might only need, based on what they owe, to walk away with, 120K. But you can't just tell them that. You have to ask them the right questions, right, to get them to understand the difference between wanting and needing in this fact find phase, right? Then from there, after the fact find, we go into the situation. After you guys have the situation side of thing and you have gotten them to paint a picture, come in here. All right. So after you've gotten them through the situation side of thing and they've painted that picture, or painted a picture of their dream outcome in their situation, you get them to paint a picture of the house, right? Inside of the house, outside of the house, neighborhood, what's going on with the property itself, right? And then once you have that picture painted from the inside of the house, outside of the house, neighborhood, you're then going to hit them with a hold mode, right? So what a hold mode looks like for everybody, and just for everybody in this call, it's, hey, I'm going to get up from my desk for a second and go talk to the underwriting team. All right. When you guys do your introductions, you can also implement the third party. Hey, I'm looking at buy houses across the Southeast. Me and my underwriting partners, if we can't get you approved, we typically close on, timelines that make sense for you and what you got going on. Right. And that allows you to, at this point, when you go for the first hold, you then say, hey, I'm going to get up from my desk for a second. I'm going to put you on hold. I'm going to go talk to my underwriting team. All right. That makes them feel that this is real. This is not just some, I'm going to pull an offer out of my ass. There's actually people that he's going to talk to. One of the cool things for all you guys too, when you have these sellers on hold, is that you just need to just listen in. I've had sales conversations where I understood exactly what somebody is wanting to see. And like the things that they didn't tell me directly on the call, just because I told them I'm getting up from my desk, put them on mute, and I just sat there and I listened to what the spouse and the husband were talking about of what they wanted to see in order to move forward, right? Where they were actually okay with being at versus what they told me, right? And so that's going to be super important. And then when you come back from that first hold, you're not giving them the price yet, guys, right? So you are not going to give them that price, and the reason is you're creating more marination, right? Hey, I talked to the underwriting team, right? They don't have a number quite yet. They're working on it, but they did want me to ask you, X, Y, and Z. And that's going to always be some level of condition questions mixed with, okay, and awesome. If we do get to a number that makes sense, are you guys ready to move forward today, right? So you can ask a HVAC question or a foundation question in addition to the buy-in question, right? If we can get to a number that makes sense, are you guys ready to move forward? And notice at this point, guys, I haven't talked about novations. I haven't talked about our marketing process. I haven't talked about any of that, right? It's a discovery call, painting the picture, and then we're just trying to hyper focus on getting them as low as possible, right? So at this point, you should have already gotten your buy-in, your number from them, right? Like, what's the number that makes sense for you that if we can get to that you're ready to move forward? Awesome. Let me go see if I can make that happen. And then when you leave that first marination hold to go back to the seller, right? At that point, you should already have an idea of where they want to be at, but then you're going to come in with your anchor, right? So what that looks like in real time, if a lead came in at 320 on the form, you had a conversation, you figured out they dropped to 290, but you needed at 220 for a cash purchase and 250 for a novation, right? What that looks like is this, is you're going to then go back from the second hold, right? So you got the buy-in on price. You got the buy-in in regards to if we can get to a number, they're ready to move forward. You're now then going to come back from that second hold. When you come back from that second hold, guys, right, you're going to get further buy-in. You're going to frame it as good news as well, too, even if the offer is lower than where they wanted to be at. Hey, I got some good news. Ultimately, they actually did come back higher than what I thought they would. And there's a virtual withdrawal number. That's one of the things we do to make it feel more real, right? Whether you're novating or whether it's a cash purchase, all you guys are still allocating resources to making this happen for them. And all you guys have a certain capacity of how many houses you can work right now. So you can say, in terms of the allocated resources, the virtual withdrawal, like that can not only is real, but you can make that feel even more real to them with the resources / money sitting in that account. So you give them the virtual withdrawal number, confirm that they wrote it down. And then one of the things that I have started to do on my calls that I think works really well, if in your fact find, you realize that there's too much of a gap between, let's say the seller wants, 290 and the cash offer is at 210. And based on the situation, they're motivated, but you ultimately understand like they're not desperate, right? One of the things that we do on our sales calls is, hey, listen, I had my, part of our process is me to present this to you. Historically, these are a little lower. We do have other options, but part of what my job is to present this to you first and foremost, right? It does make me a little uncomfortable sometimes because you did express where you needed to be. However, with where we're at, right? I'm happy because they came back higher than I thought they would, but it is ultimately, this part makes me a little uncomfortable sometimes because it's not where you exactly wanted to be. What that does, guys, instead of them being like, oh, no way, I'm hopping off. They're like, spit it out. What is it? That's okay. It's okay. Tell me what they came back at. Right. And then you give them the offer. The underwriting team came back at, $215,000. All right. Oh no, that's not going to work. Ain't no way. That's, I understand that, right? Based on what you told me, that makes sense. I guess what's a number that if I, try to go back to them based on where you're at and, where they're at, that I could go to bat for you. You don't tell them a number. You ask for feedback on a number based on, the gaps of where you're at versus where they're at to go try to fight for them with the underwriting team to get their offer up. When you do that, people drop themselves. Oh, okay. Try to talk to them about, 250, right? Try to talk to them about 270, right? And so you're now getting the seller to drop their number while you're hyper focusing on just price, terms, where you're at based on closing date, the benefits, moving costs, right? The things that you guys can hyper focus on with your quick cash closes, right? After you do that, right? And it's not just like a one-time thing, right? So seller comes back, says 270. Hey, was able to talk to the underwriting team, got them up from 215, wasn't able to get them close to 270, but was able to get them to 225. I'm here to go to bat for you. Tell me what your thoughts are. What are you thinking? I did get them to move a little bit, but it ultimately wasn't, where you needed to be. Now seller might say something along the lines of, okay, no, well, there's two things. It's like, hey, either 270 is where I need to be at, or see if you can try to get them to 250, right? Now at 250, right, what I would do is I would go back to the underwriting, right? And I'd, still come back with a quick cash close. Now, hey, was able to get them up from 225, but they're staying closer to, that 225 number. The most they can do is 227.5. Oh no, that's not going to work. Either the seller will drop or they'll stay firm at a number, right? Oh, that's not going to work. 250 is the lowest I can go. Well, question for you, Mr. Seller. I understand that, I'm going to bat for you, but it just seems like there's too much of a gap here. No. If I was able to get you to that 250, would you be able to work, with us on access, timeline, and our pre-marketing process? Right? Those are the three pillars that you guys are going to mention, right? Because now we've already agreed, on a price, right? 250. But it takes it from, hey, we can do that to, well, if I could get them to do that, then would you be able to work with me on this, this, and this? It shifts the frame of buy-in from, oh, I'm ready to give you an offer, are you ready to sign, to, oh, if we can do this for you, are you ready to move forward, right? Completely different shift of the frame. Ball is now in your court. So now they're going to ask access, timeline, and pre-marketing. For all you guys, expectation setting is the most important thing, right? You need to tell them, right? Buyers and buyers agents will be coming out in addition to contractors, inspectors, appraisers, anybody in our network that we, deem as a fit, right? In addition to that, there's a little longer timeline. Now, for everybody on this call, I will tell you timeline with novations is the most negotiable thing, because it's the Lamborghini analogy. If you get something at a low enough number, even if you don't have any direct off-market buyers for it, you get a property at 70% of its market value, you take it to the MLS at 85%, there's still retail buyers that you'll be able to potentially access that clearly see that's a good deal if you can underwrite in a way where you undercut the active market, right? But let's just go back to the sales process for a second. So access, timeline, and then you tell them, hey, we have a marketing process where you will see the property marketed, but it's not a listing agreement for you. You're not responsible for any of the, fees for that. And worst case scenario, if we do, at the end of our due diligence, right, from a timeline standpoint, you already set that expectation, right? But at the end of our due diligence, worst case scenario, if we do terminate and walk away as friends, we actually gift you the marketing material to help you get to where you need to be with the house. And so that's not something that you have to pay for at all. All right. And so those are the three expectations that I'm setting with these sellers. Access, from a timeline standpoint, guys, houses, under $500,000, 30-day due diligence, business day, close on or before 60 days. Houses above $500,000, try to do 45 and 90. $500,000 to $1 million, and then $1 million plus, try to do like 60 and 120. But all this is also kind of, dependent on how low you're able to get it, right? And we'll talk about that. I'll show you guys a calculator you guys all get access to after this call in regards to how to underwrite these and how we underwrite them, right? But once you have buy-in on those three things, the seller will say something along the lines of, well, hey, if you can get me to my 250, then I can work with your access, I can work with your timeline, I can work with that marketing process, right? And you're also at this point setting expectations that through this process, whether you call it your equity protection program, whether you call it your retail buyer program, whether you call it your cash offer with your process, right? You make it very clear to them that yes, you are still a buyer looking at buying it, but this process, is contingent on you having somebody lined up to either partner with or sell it to after you purchase it from them. And if they ask you, well, what does that mean, right? Well, if John and Susie come to us from our marketing, the longer timeline and the access and say, hey, we want A, B, and C instead of, instead of us thinking we needed to do A through Z, that allows us to save on rehab costs and holding costs, which is why, if I am able to get the underwriting team to move forward, which is why we could potentially get you approved at a 250 instead of a 225, because it allows us to look at potentially mitigating certain things that would be, through our quick cash close. Otherwise, just, stuff that we can't potentially explore. All right. And so those are the expectations you're setting. It gives you the ability to cut the cake anyway to get them to their number within the days agreed to on contract. Right. And you guys operate like pro bono attorneys. You're still trying to close this ASAP because you don't get paid unless you can start the project or, once you get them to the closing table of, have brought on a third party. Right. From that, just jumping back to the sales process, and we'll open it up to Q&A after this too. But from that, access timeline, pre-marketing process, buy-in, you then hop back into marination mode, right? When you hop back into marination mode, that means you go back to your underwriting team, right, to have the conversation about getting them to 250 because you already have the buy-in from them on access timeline and pre-marketing, right? You already have this buy-in. You know that they're good with that if you can get to 250. And the same way you would negotiate the quick cash close now is the same way you start to negotiate these novations. You can come back at 245, right? You can, come back at, 250 and just say, hey, I got them to approve. You want the good news of the good news, the agreement's in your inbox. Let's go ahead and review it together, get them to sign off on it. And then it's off to the races, right? But ultimately, that is a couple objections and also the reason why we do what we do at each stage of this process. When you lead with the quick cash close first, guys, sellers will bring themselves down. I had a deal where the lead form came in from Facebook at 320. Through following the sales process, we would have needed a 220 quick cash close, aka just off market, wholesale, take it down private money price. But because I followed the sales process, the seller talked himself down from 320 to 250, was able to hit them with these exact same frames, got them to close on the call, and then the novation closed 60 days later, whatever it was, right? It was novations have longer cash conversion cycles, and it's just the reality from acquisition to close. But this is the ideal sales process that you guys need for the purpose of not short selling yourselves or not undercutting yourselves on potentially being able to lock up deals at even deeper spreads. But then also if there is a gap that you just can't simply bridge, right? Being able to have novations at prices that will actually sell because you were able to come in and negotiate at a quick cash price first to anchor them before you gave them the if then, well, if I can get you to this number, then can you work with me on access timeline pre-marketing? So that is a high level overview. I know I did a lot of talking there. I want to open it up to you guys just to ask specific questions on the process, how it works, what we've seen work well across the states and markets that we operate in. So let's open it up to some Q&A, guys.
I got a good question.
What's up?
At what percentage are you doing novations at the ARV?
Oh, let me show you guys this. It's a good question. So, So this is a great calculator for your novations, but also your quick cash flows. So if you notice, there's two tabs on the bottom. Offer with process, right, is novation. It's a parallel for the verbiage. And then we have the limited access calculator as well. And so in terms of how we're doing the offers, right, this is where acquisitions and dispo being on the same page is really important. Acquisitions ultimately needs to understand what price will I get when I go to exit on this, right? So what that means for me is like if I see a bunch of properties listed at, 360, 358, 365, and they've been sitting for 30 days, 40 days, 50 days. Well, I don't need to come in at that same number because I'm going to have the same thing happen, right? So price we can sell it for would ultimately need to be something along the lines of like a, 350, right? Because I'm undercutting the active market. It's not just about what has sold, right? Because that's what your properties will appraise for, but it also is important to understand the active market so you can undercut that active market, right? And then, here's what you guys can say if there's tenants in the property. Here's what you guys say, in terms of calculating your cost per square foot based on the condition that they tell you. You're going to need access, right? Timeline's the negotiable aspect, but access in your marketing process need to be firm. And then here's, just a little quick cheat sheet on, identifying some comps for you guys. But ultimately, to answer your question on how we price it, we start with what would we sell this for? When we go to move this, what is somebody going to buy this at? And then from there, we're actually just line iteming it out. All right. So you have your realtor fee. You have your, if you want to put it at 90% of market value in slower markets, you can type in 0.9 here and it'll adjust that too. Because it allows you to find that balance between not getting the same data and results that a listing has gotten in your market, but also being in a position where you're not losing or leaving money on the table, right? So like in hotter areas, I would just do it at 1. In areas where stuff's moving a little slower, you can type in the 0.9. All right. And then we're just whatever you want to make on it, you're subtracting that, you're backing that out, you're backing out what concession requests you might potentially get. All right. One of the things I'm always doing with my novations, unless it's something where I just need to clean it out before I take it to market, taking it to market in as is condition and then letting the buyers agents kind of tell me what they're wanting to see. And then having a certain, budget built in for concessions, for contractor pay at closes. Like on the back end of novations, if you guys have a buyer that's binding through their due diligence periods, I've had contractors do pay at closes to where instead of me paying $500 up front, I pay them $550 on the HUD, and they just go do the work, get it done, handle it on their end, and then collect the check when it closes. All right. And so that's each of these sections kind of explained. Does that make sense? Glover?
Absolutely. I got you, brother.
Perfect. What other questions we got, guys?
So my question is about DQ criteria. So I'm nationwide PPC, and we get a lot of rural markets, right? Like markets where I don't even present a cash offer, or I'll just frankly tell them like there is no cash offer, but this is what we can do. So my criteria is like if they're not within an hour of a town with 100K or more population, then it's DQ for a wholesale offer and offer RBP only, novation only. So my question is, at what point is the market so bad that you would just say this is disqualified based on location, like low pending percentage, no comps, 1 or 2 comps sold in 12 months? Like what's your DQ criteria for novation?
Like there's certain things in Louisiana that, even if they were fixed up, they're only worth, 30, right? 35, 40. And so even if we got it, at 10 in its current condition, we're only selling it at 15. So, is that worth the mechanics of securing photos, paying the listing, getting it on market? And so I think I know people that have done very well in tertiary markets. Like I have clients that sell deals in our tertiary markets as well too. And so there's opportunity out there. It's just a matter of, from a DQ standpoint, Brian, I think it comes down to what's the most like what can I actually make on this property, compared to like what it would sell for. Something would only sell for 5-10K, right, in its current condition, and 30K once it's fixed up. Is there even margin there for like they would need to pay me if I can only sell this at 2-5K? You see what I'm saying?
I personally have a 30K minimum in my underwriting, so I can disqualify by price. That's black and white. If I can't make at least 30, then it's disqualified. But what about like market conditions? No actives, no pendings, and stuff like that.
So no actives could be two things, right? No actives could be people really like the area and not a lot of people sell. And so that could be one of the things that come from the no active, no pending side of things. Of this is a desirable area where when people buy, they don't want to sell. And so I'm not as deterred by that as I am by, if I see a bunch of properties sitting 300 days, like at a certain price and the seller wants that price, right? Or like if the seller wants 250, everything in the market is sitting at 270. There's no spread for me. They're not budging, right? That's something I might disqualify, right? And so, it comes down to, in terms of your specific question on market conditions, it's a mix of the active and pending could be a good thing or a bad thing. You don't know until you actually put it on the market. Does that make sense?
Yeah. So what if you're in a rural Arkansas? Okay, I have one of these, or I have one right now, and with you, the Arkansas one. You go and look at it. It's this offshoot. It's within an hour of Little Rock, but it's super rural. There's no actives, no pendings, and there's only one or two sold. So when I see no actives, no pending, one or two sold, it's like, well, I got it super deep, but I still don't know if it's even going to move. So I was just wondering if you had any black and white criteria. Sounds like it's hard to come up with a black and white. This is qualified. This is not. You just take a stab at it and let your seller know that it's like a maybe.
Yeah, you set the expectations of at the last day of our due diligence, we're going to either have a termination, walk away as friends, or a closing date for you, right? And yeah, about the Arkansas deal that you mentioned, I'm a big proponent of I'd rather shoot my shot than not shoot my shot. And so especially if you got it at a price where you feel like it's a super deep discount, being able to initially market it where you try to make your spread and then having a strategic drop pricing. If you don't get traction within the first 3 days, drop. Another 4 days, drop. Week, drop, right? And that allows you to, when you first get a listing live, right, that's when it's hottest, right? And this is just, for when you guys go to sell stuff on the back end, me being a broker, the $250 million of real estate we've sold, your listing will be hottest when it first goes live. So you guys have to ask yourself, based on looking at the actives and the solds in your area, where is that balance between undercutting the active market so I can get this thing to blow up versus not selling myself short on how much I can potentially make on this property? All right. And if you guys have those factored in, what that looks like is there was a property I had from Esteban, equity cash offer Donovan's team, right? There was a 20-day timeline to sell it, 25 days, but they had it at 280. Everything in that market was active at 360. We took it to market at 340. We're able to get by. So we undercutted the market by 20K versus all the active inventory in that area, right? We're able to get a buyer in place because we created a frenzy that was 10K above asking, still lower than the other actives in the area, and took no commission, right? And so that's the power of when you do create a frenzy, you're able to get people up, but you don't want to come in too low. Otherwise, there's certain benchmarks on where people's ceiling will be with where they're willing to come up to. So long-winded answer, but I hope that, Brian, in terms of Arkansas, shoot your shot, brother. I think that's the biggest thing of just get it out there. Worst case scenario, you get offers coming in, then you go back to your seller and are able to retrade based on having the, access that you do and just the marketing channels that you have it posted on. And then when people see stuff dropping rapidly with pricing, then you'll get people that just buy real estate to hold it, regardless of, caring about the location. Okay, cool. It's a 4-sided brick in X market. Even if it's in a rural market, I can still cash flow this thing. So, Glover, I see your hand is raised, brother. What you got for us?
All right, bro. So check this out. What about on portfolios, right? Are you guys just doing residential, or you go to the commercial and portfolio side as well?
In terms of doing novations on portfolio deals?
Yeah, because I got a this one is 22 units portfolio, but he may be open to that opportunity. But I'm just saying, have you ever worked with something like that or tried that?
Yeah. So it's like there's two, like you're able to present a menu, right? What
Right.
Novations allow you guys to do is have two cash offers, right? Two cash out solutions, right? In your tool belt for these sellers. Because the reality is whether it's a quick cash close or a Novation, they're getting a lump sum of cash at close in their bank account via check or wire, right? So with a portfolio, what you can do is, hey, if we're closing on it quick, coming in, want us to, buy the whole portfolio, ultimately, we'll be at X price. Now, if you're open to our equity protection program, where we can parcel these out, sell them off individually, we'll be at X price for this one, X price for this one, X price for this one, in total making you X amount more, right? But in order to do this, you have to work with us on access, timeline, marketing price. So it's just like the understanding, like when you guys are doing off-market stuff, who are you selling it to? Somebody that is either going to buy it from you and take it to the MLS, or somebody that needs to make money. You're selling money, right? When you're selling novations, you're able to sell things at, 85, 90, 95, 100% of market value, right? And so understanding that the value is being able to give the benefits of working with an investor to a prospect in terms of no closing costs, commissions, fees, anything like that, right? But doing it closer to a retail price, right? You don't say at a retail price, but closer to a retail price. And so to answer your question, Glover, in regards to the portfolio deal, absolutely. You just have to present it in a way where he understands if he wants to go quick cash close and do the portfolio in one swoop, we're going to be at X price. If he's open to individually parceling these out and doing novations on them, he's going to be at X price. And the difference between the two is this amount of access, this timeline, and the fact that all these properties are going to have a marketing process that your company is going to cover.
That makes sense. Just from the number standpoint, because I'm like a numbers geek, right? If we say, for prime example, I just looked at the file real quick. It was 70 units at full value. Each property would appraise for around 240K per unit, bringing the whole entire thing to around, I think, like 16 million in worth, right? On that portfolio, of course, it's value add projects, but on that portfolio, he's only asking for $8.5 million. So now it's, I guess, proposition it to institutions or people with, I was thinking more so like going the DSCR route and having, them put down a lump sum of money and then having the seller carry a second. But the Novation thing probably don't sound like a bad idea, but I don't know if they'll be on for just the listing thing, because I feel like the off market aspect is kind of what they're gravitating to, because they don't want to, everybody knowing they're selling.
Yeah, and that's just like being able to give them the menu options based and being able to understand their situation. Back to the sales process, right? Why do we do a strong intro and then just hyper focus on them? So that way you can understand their situation, their dream outcome, and what's going on. You can use that as ammo. Well, hey, you talked about wanting to get this number for it, right? And Glover, what you brought up in regards to just selling it to a fund with one swoop is not a bad idea too. If you can get it at a number where you can make 200,000 or 400,000 just selling 22 houses in one swoop, right? Like it's like the return on time aspect too. Like if you can make 400K doing that versus 500K selling like all these out for 25K each, making 25K rips on the however many houses. Well, guess what? You spent a lot more time with parceling them out, making X amount more. Was it really worth all the extra work? So that's another thing you guys on your end as investors have to understand with the spread differences. Does that make sense?
Yes, sir. Absolutely.
Perfect.
Hey, Nico.
Hey, what's up?
I had a couple. So just clarifications. When you talk to them about access, how do you do the objection blocking of the fact that they usually come to the investors because they are thinking about the stress of having people, in and out of their house? Have you gotten that objection?
Yeah, you just frame it in a way where it's not a traditional open house, right? You don't even have to leave. If somebody comes and asks you questions, you actually just tell them, hey, direct those back to the people that sent you out here, right? And so we are going to need access. But other than our initial pictures, where I ask you to just, without breaking your back, get it as nice looking as possible, right? Other than that aspect, right? It's not like you don't have to leave when access comes through. If you want to leave, we will give you guys a gift card to go grab some ice cream. All right. But ultimately, we're going to have either preset times or 24 to 48 hour notice that we give you. And the biggest thing that we are going to need from you is communication and access.
Okay, that's good. The other one was on the other end, the pre-marketing process. What's the scope of that pre-marketing? What are you doing? Is it just us talking to people and just kind of trying to find a buyer offline? Is that what that is?
No, it's you taking it to the MLS. So you identifying for their property, what's the specific local MLS that will get me the most local traffic, but also from the syndication channels, like having the syndication on the Zillows, the Trulios, the Realtors. And the fact that if they look up their property, they will see it marketed with those photos of the property online, but they're not responsible for any of those costs.
Okay. So, okay. And I guess the last one is, what's your communication frequency with them? Like how closely do you keep them in the loop?
After a contract is signed,
Mm-hmm.
I'm trying to have at least 2 updates a week, if not 3, just giving them status updates because it preps me as long as I set the right expectations for potential retrades too. I can keep that seller report, give them overarching updates as to what's going on, where people are coming back at. And that example of the lady at 250, hey, got this person at 225, got, I know it's lower than what you wanted to be. I'm trying to get them up, just keeping you updated. Got this other person at 237. Where do you want me to come back at? Oh, see if they can do 240. Okay, cool. So now you're basically middlemaning in a sense with the Novation expectations set in regards to the number that they're netting after your fee is also accounted for.
Perfect. Thank you.
Absolutely.
Do you have the dispo or TC person doing those check-ins, or is it the acquisition person? Because that's one thing I don't want to have to talk to the seller anymore once that contract's signed. I'd rather have dispo or TC do that. For guys with teams, they don't have the acquisitions making those check-in calls, do they?
It just depends, right? It's who has more rapport with the seller. Specifically for our done for you dispo and TC, we don't do that because it allows you guys to have the retrade conversations that come with the rapport that you've built. And so if acquisitions has a really good rapport with the seller, in some cases it's actually better coming from acquisitions, and you got to think about it. If it's a 5, 10, 15-minute call, that potentially is the difference between a 25K spread and a canceled deal. It's not a bad return on time to at least have those check-ins, to keep that rapport with the seller post contract being signed, give them some high level updates, give them feedback if offers are coming in lower and just seeing where their head's at more than anything. I know it's not what you wanted to hear, Brian, but but if guys have internal teams, I know people that have leveraged dispo if they have more rapport. I know people that still use acquisitions because they're the person that got these people to sign the most expensive asset on a piece of paper on that phone call or in person. Right, that's who they had the trust with to even start the process. And so it's about getting the result, right? Like how do you continue to build rapport with that seller, make sure they don't text you saying, hey, I want to cancel the contract. It's by you having that some level of rapport and updates that you give them even after you locked up the agreement for the first time. Because we've all dealt with sellers that were like, oh, the salesperson told me this. And if you're the salesperson or you're the one that locks it up, it's like, I didn't fucking tell you that. But because they're talking to somebody else about the updates, about what's going on, about where stuff's at, sellers are trying to like mom and dad it and play both sides. Does that make sense?
Yeah. It's just for me, when I get to the point where I got 10 or 15 on the board and I'm doing acquisitions, they just fall through the cracks and I don't follow up with them as much as I should. And you do get some of that where they feel like they're in the dark. Tying it back to Claire's question about the pre-marketing. I mean, it's smooth. It goes over. I could see how people would not question it. Yeah, pre-marketing, buyers and buyers agents. And then they see it listed on the market and they call you and they're like, it's listed on the market. I thought you were buying it. Even I'm super transparent and I still get that. Like, seems like it's a little, by just saying pre-marketing and framing yourself as a buyer, you're going to get more of that pushback. How do you handle that?
Say that again. I want to make sure I'm answering it correctly.
Okay, so you're framing it in the offer call as, yeah, I can get you this number as long as you agree with the timeline, the access, and the pre-marketing, and buyers and buyers agents, and it sounds smooth, and it's going to go over, and they're going to agree, and then you're still positioning yourself as the buyer, and it's going to be unclear. I think you would get more pushback from, oh, it's listed on the market. I thought you were the buyer.
Yeah,
I'm super transparent with mine, and I tell them flat out I'm going to be listing it, and I still get that. So I'm just wondering how you deal with that.
the way that I deal with that is like just in terms of like the objection, like there's always going to be sellers that no matter how good you set the expectations, they're going to try to, retrade on what the actual process is, right? You just got to respectfully be able to push back. But I think, in regards to the transparency, the reality is if you guys get a cash buyer from the MLS, you can double close this. All right. If you guys get a buyer that is closing and, if you get 10 buyers that are interested, but they're all, 70 days out or, 45 days out, but you got to close in 25, right? We all have the resources based on the community that we're in to be able to tap in and get private money, right? And know that there's exits already lined up on the back end. And so I still tell them that we're looking at potentially buying this cash, but through this process, we need to have somebody lined up that we either partner with, or as soon as we buy it from you, we're doing the work and selling it to them, or as soon as we close on it, we're selling it to them. Like that's just the reality. And this marketing process is non-negotiable, and our access is non-negotiable. And if they have an objection on timeline, that's where I can negotiate. I can drop from 60 and 30 to, 30 and 30 to 20 and 20. So I still have, even at 15 business days with close on or before, 15 after, that still gives you guys 42 total calendar days. And then I always have a unilateral 8-day extension built into mine, which gets me another 10 days. So it's still around 52 calendar days to be able to get these sold. And if you guys are underwriting these right and getting them at the right numbers, you can undercut the market up. You should be able to, have these moved in, 5, 10, 15 days, 20 days for being under contract, which should be your due diligence period from a calendar day to business day translation. Does that make sense?
Yeah.
Did I answer the question?
Yeah, I mean, you're positioning yourself as the buyer because you always have that possibility to be able to double close, so it's technically not lying. I get it.
Yeah, but and also I've had properties where I got so much traction, sellers wanting to close sooner, I just close on it with private money and then have it lined up to already be sold. Right. And it also allows you, like, think about this, guys. We all have gotten calls from wholesalers trying to move our deals, saying they need it lower, and you're like, yeah, whatever, buddy. But when an actual cash buyer tells you where they need to be at, you take it a little bit more serious. Can we all agree with that?
Mm-hmm.
It's the same psychology with why you still want to keep that frame that you are a cash buyer, even with the equity protection program. But through this program, you do have to have a buyer lined up, but you still have your resources of being that buyer.
Yeah, I hear you.
Mr. Deeds buy houses, what you got for us? Brian, any other questions before we popcorn it off, brother?
No, I'm good.
What's going on, bud? How you doing?
Good. How about yourself?
Good. Couple questions. One, I kind of missed the first maybe 10 minutes of the call because I was in a meeting. So you were going fast. But I had a question. I don't know if y'all went through this regarding your dispo when you're dispoing it, because I've heard different variations of doing this novation. This is kind of new to me. I guess I did it old school or a different creative strategy where I put it into a trust. I did the document for the trustee, and then I processed everything through the broker doing it like that and listing it, signing on behalf of them, that kind of thing. I'm not sure I understand the documentation when you transfer. Does your seller see the buyer's contract? Do they have to sign it, or are you signing it on their behalf? And do they see, I'm guessing on the HUD statement, do they see the fee that you're making if it's north of $20,000? Have you had anybody ever bark at that?
Yeah, so there are a couple questions in there. I'll break those down. So the paperwork looks like this: purchase and sale, right? AIF. Certain markets where you don't need the purchase and sale, or where you don't need the AIF for the MLS, purchase and sale with the right marketing verbiage, right? Now, if you just do purchase and sale with the right marketing verbiage, you can't sign the A to C agreement as the AIF for the owner of record. So if you get purchase and sale, regardless of what purchase and sale and AIF, regardless of what market, the reality is it streamlines, your document procuring processes instead of, having to go back to the seller post contract, purchase and sale and AIF being signed. I then take that, right? I get it on the MLS. I'm getting offers in, I'm getting, interested buyers, some cash, some retail, whatever those offers might be, offers that are then fielded, right? From those offers, if it's FHA, conventional, VA, I could double close to conventional and VA, but I have to bring my own transactional funding, right? I can't double close to FHA because of seasoning period requirements. And so I'm going to novate, because the mechanics mean on novations, I show up on the seller side of the HUD as a payoff or a novation fee or a consulting fee, right? And that allows me to avoid having to get transactional funding. It does still show the seller what I'm going to make. That's why the expectation setting is very, very important with your novation process, right? Because there is visibility if you do decide to novate with what you're making. It's going to be on the seller side of the HUD in the form of a payoff, a novation fee, or a maintenance fee, right? So maintenance / consulting fee. And so when I have a buyer that is FHA, VA, conventional, and I'm not going to double close or assign to that buyer that comes from the MLS, I'll then use my AIF to execute the A to C agreement along with novation agreement, send it off to title. But then I'm having the actual owner of record go in and sign off on all the wet documents on the official close date to reduce my liability. Because it's basically, from my perspective, let's get this to get the process started. I'll do everything to get you to this number. And then you show up at the closing table, you do the final review, you wet sign, make sure everything looks good, and then you're good to go.
Right. And then they're getting their net based on what you originally agreed and negotiated with them, correct? Second question, I noticed it said something about done for you, and I'm guessing this part of this for dispo. If I get a deal under contract, I can send it to, I guess, Esteban or to you or somebody within your team or something like that.
Yeah.
JV on the dispo side.
Yeah, we have JVs. If you bring a signed contract, we'll do a 50-50. If you set an appointment and we lock it up, it's 60-40 after our team is paid. And then we have the done for you dispo and TC, which is taking my team 8 a.m. to 8 p.m. becomes your team for the dispo and TC side of things. You get director, manager level consulting, and then you also have myself as a fractional partner in your business. For the same price you would pay one $6 an hour employee. You get a full team 8 a.m. to 8 p.m. 7 days a week. And I'll also help you with setting the right expectations on these deals and the consulting aspect that you need to go get more contracts from, the leads that you guys are getting from, social media.
Awesome. Esteban, you got this recorded, I'm guessing. Is there going to be a replay that you can send out so I can catch the first 10 minutes of this call?
Yeah, maybe, brother. We'll send something next week for sure.
Okay, I appreciate that. Bro.
I'm interested as well. I think I was about the same amount late. Thanks in advance.
Well, luckily I missed the first 5 minutes. I was talking to my sales team. It's like you have an alarm set and then you completely forget about it. So shout out to all of me.
So we missed 5.
So you guys probably only missed like a couple minutes.
Hey Nico, are you signing the offer?
Yeah.
Novation?
Someone asked a question.
Are you signing the offer on the Novation, Nico? When the makes the offer?
Yeah, if I'm novating, I'm signing, Nikhil Sharma, AIF, or Esteban. On how do I say your last name, Esteban? I do not want to.
Andrade. Andrade. It's a good.
But yeah, yes, the answer is yes. Yeah, I'm using that AIF, but I'm not signing the stuff at close, like the stuff that the title company closing attorney produces for the final HUDs and everything. The seller is signing that.
Got it. Are you sharing the Novation documents and the script?
Yeah, Esteban, you should already have that if you just want to redrop that for everybody. I do got to jump to a 12 o'clock. But Esteban, you're coming to Austin, correct, for our event in end of May?
Yeah, most likely, yes. Let's make it happen, bro.
Cool. For anybody in your community that wants to come as well too, just if they want to get with you, if you send them to me, we'll make sure they get a discount just for already being in your community in terms of the ticket price. I can do a certain percentage off of just standard
Hey,
ticker
you
price.
know everyone here about that event in Austin?
Yeah.
Just so we're curious.
Yeah, so for the people that are doing north of $300,000 a year in assignment fees, we, through the mastermind that Chandler and I have created, Level Up, we have 3 events a year, that are open to operators doing at least $300,000 a year. We're trying to go from, hustler to scaling, or, have already scaled and are trying to scale more. And so Chandler's area of expertise is the processes, the guardrails, and we've scaled 50 businesses from 20 to 30K a month to 6 figures plus. And so these are high level events, not to name drop other people in the community, but this is not like a beginner newbie event where people are asking what assignment contracts are, what purchase contracts are. This is all about building your business the right way. And there's no motivational rah-rah stuff, because if you're in the rooms that we're in, you're already motivated. And it's just about getting the right tactical information to scale correctly. So it is in Austin, May 29th and 30th. Tickets are normally $1,500 or $2,250 if you bring somebody with you. But for everybody in here, we can just do a standard price on the first ticket at $1,000, and then the second ticket at $500. That's just for you guys. You got to, Esteban, you got to from your call, and I got to confirm that, they're in your community. And that's just like I mentioned, a special pricing for you guys if you guys do want to come to that.
Sounds good, brother. Thank you. All right. So
Yes, sir.
go for it. Oh, if everyone is interested in done for you dispo solution, definitely reach out to Nico. And we may be putting this into YouTube, so go to my YouTube channel and subscribe to the YouTube channel. And if you're not joined to the school community, go to the school.com/REIpreneurs, because we're going to be putting all this recordings in there too, and all the assets that we're being shared with, just so you guys are aware of it, right? And if you're a client, obviously, let's get more leads and let's get more deals. All right, guys. So that's about it. Nico, anything else you wanted to share?
No, I just excited to see our continued collab, Esteban, and just anything that anybody in your community needs. We're a resource. We got Brian Payne and Brian H on the Done For You Dispo and TC. So definitely, if there's other people that are in here that would be a good fit for that. If you're already doing deals, the whole goal is for you guys as operators, CEOs, and business owners to hyper focus on driving revenue, either through you doing it or through duplication of yourself. So looking forward to the follow-up conversations, and excited to always come on here and talk to the community, brother.
Let's make it happen. Thanks, brother.
Yes, sir.
And everyone, hope you guys have a great one. All right. So
Thanks,
happy
Jim.
Friday.
All right, everybody. Bye, guys.
Bye-bye.
Every Friday at 11 a.m. Eastern, we bring in operators and experts breaking down what's actually working for real estate investors right now. Link to join the community is in the description. We'll see you there.